One of the chief advantages of cryptocurrency is its decentralization. Now, what does that mean? Well, in simple terms, cryptocurrencies function independently of any central authority, like a government or a financial institution. This autonomy gives cryptocurrencies a unique edge, a freedom that traditional currencies just don't have. You see, when you're dealing with traditional currencies, governments can interfere. They can manipulate currency values, impose sanctions, or even freeze assets. But with cryptocurrencies, these potential issues are mitigated. The power is put back into the hands of the individual users. Moreover, this decentralization can potentially lead to increased privacy. Transactions made with cryptocurrencies can be pseudonymous, meaning your personal information isn't tied to your cryptocurrency transactions. While this doesn't mean absolute anonymity, it does offer an additional layer of privacy that traditional banking can't match. So, decentralization could be a strong case for cryptocurrencies taking the lead. However, the volatility of cryptocurrencies can't be ignored. Picture this. One moment you're on cloud nine as your digital coins are skyrocketing in value, and the next, you're in freefall as prices plummet. This roller coaster ride of unpredictable highs and lows is a hallmark of cryptocurrencies. Unlike traditional currencies, which are relatively stable, cryptocurrencies can experience drastic price changes in the blink of an eye. This volatility is not just a thrill ride for investors, it's also a major concern for those considering using cryptocurrencies as a standard form of payment. Imagine buying a cup of coffee with Bitcoin, only to find out later that the same Bitcoin could have bought you a car. Such extreme fluctuations in value make cryptocurrencies a risky proposition for everyday transactions. This volatility is a significant hurdle for cryptocurrencies to become a mainstream method of transaction. So while the decentralized nature of cryptocurrencies is attractive, their instability is a tough pill to swallow. Cryptocurrency shines in its accessibility and inclusivity. In a world where nearly half of the population lacks access to basic financial services, cryptocurrency emerges as a beacon of hope. It promises to democratize the financial world, breaking down barriers that have long excluded many from the global economy. Imagine this. All you need to step into this digital financial realm is an internet connection. There are no physical banks, no paperwork, no credit checks. Just you, your digital wallet, and a world of opportunities. Cryptocurrency doesn't discriminate. It doesn't care about your location, your income, or your credit history. It's a financial equalizer that offers everyone a seat at the table. For those unbanked populations of the world, those who've been left behind by traditional banking systems, cryptocurrency could provide a life-changing solution. It's a digital key, unlocking access to financial services and paving the way for economic empowerment. This universal access could be a game-changer, pushing cryptocurrencies ahead. Yet regulatory and security concerns pose a big challenge. Cryptocurrencies, by their very nature, are decentralized and operate on a global scale. This makes it extremely difficult for governments and regulatory bodies to implement and enforce regulations. Without a clear regulatory framework, cryptocurrencies can be used for illegal activities, such as money laundering and funding terrorism. Moreover, the lack of regulation also opens up the possibility of fraud. In the past, we've seen instances of Ponzi schemes and other fraudulent activities that have led to significant losses for investors. As for security, while blockchain technology is inherently secure, the platforms and wallets where these cryptocurrencies are stored can be vulnerable to hacking. We've seen high-profile cases where millions of dollars worth of cryptocurrencies have been stolen. These concerns put a question mark on the widespread adoption of cryptocurrencies. The path to replacing traditional paper currency with digital assets is fraught with these challenges that need to be addressed. So will cryptocurrency ever replace paper currency? We've journeyed through the labyrinth of possibilities and complexities in this digital era. We've seen how cryptocurrency has the potential to reshape our economies with its decentralization, breaking down the walls of traditional financial institutions and offering a level playing field to everyone, everywhere. It's a vision of a more inclusive financial future. Yet, on the flip side, we've also taken a hard look at the volatility inherent in the crypto world. The dramatic fluctuations in value can be a deterrent, making it risky as a stable store of value. And let's not forget the regulatory and security concerns. The decentralized nature of cryptocurrency, though a pro, can also be a con, making it a playground for illicit activities and a challenge for regulatory bodies to control. So, are we on the brink of bidding adieu to paper currency? The answer is not that straightforward. While the future of cryptocurrencies is promising, there are significant barriers to them completely replacing paper currency. It's a delicate balance between innovation and security, between freedom and regulation. Whether cryptocurrency will replace paper currency, only time will tell. But one thing is for sure, the world of finance is changing, and cryptocurrencies are playing a major role in that shift.